Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's topic is going to be on the Law Society's bookkeeping compliance documents, the documents that you are expected to present as part of a spot audit or an audit or a compliance check that is a great practice to have right from the get-go so that you're well prepared and always audit ready. Today's 1-hour session has been approved by the Law Society of Upper Canada, LSUC, for 1 hour of professionalism hours for CPD credits. And you are able to search this up as the Law Society Bookkeeping Compliance as the subject within your portal that you have so that you can ensure that you report this in as a 1-hour CPD that you've gained. I kindly request you to ask us your questions using our chat window, and I do have our support staff to answer any questions. As part of this webinar, to make this a little bit more interesting, we are going to be using our uLaw product, which is a legal accounting and practice management software, to outline and present many of these documents that the Law Society expects you to present as part of your practice, but it's in no way meant to be a product demonstration. We are a legal accounting software, and you should expect almost the same, if not same level of documentation from other legal accounting softwares as well, and we're just using uLaw as an example. Okay. Moving along, every uLaw webinar has an agenda, and so does today's webinar, more importantly because of the CPD credits. And the agenda is going to be a pretty tight-packed 1-hour session, and the agenda starts with, the trust and general ledgers, really outlines what these documents are, what are they meant for, and how do you as the legal professional manage and maintain these documents? How do you generate them to begin with? After the trust and general ledger documents, we're going to talk about the Receivable and Disbursement Journals. So there's a total of 4 journals, 2 for general and 2 for the trust accounts. And again, what does it take to manage and maintain these 4 journal documents? We're going to talk about very briefly, but for sure highlight the reconciliation process. It's certainly a process that you're well aware of. We're looking to understand how you could simplify that process, make that more seamless, simple for legal professionals, and what you should expect out of that reconciliation process. What is a fee book? Why is it important? And why do you need to maintain it to begin with as a legal firm, and the obligations that you have in reporting your revenue as part of that fee book. Finally, we're going to touch upon some of the other compliance documents that the Law Society expects you to present when asked for, and those documents include Form 9A, deposit slip, inter-matter transfers, etc. Okay? But the highlight of today's webinar and what we're going to cover as the content is truly stick to the compliance documents that are outlined. And based on your silo of practice, based on your style of practice, some of these documents may vary. Okay? For example, if you are not in the business of managing trust money, and if you're just strictly working out of getting payments after you've done your work through general, then obviously reconciliation of trust, the trust ledgers, the trust journals do not apply to you. If you're not in the habit of doing inter-matter trust transfers, like for example real estate, you're just doing simple small claims which do not necessarily involve that, then you're not obligated to present those documents. Okay? We're going to talk about how much time just one legal professional in today's world spend in generating these documents. In fact, first point obviously is to be aware of all these documents. And the second point is to really ponder and think about the time spent in generating these documents and the time that it should actually take. Last but not the least, how does a legal accounting software in general provide you the benefits in today's context with time and age and the advent of technology? How can a legal accounting software provide those benefits to you as a legal professional to provide these documents by design from the get-go. Okay? Fantastic. So before we get started with our first agenda item, we wanted to highlight, just to set the context, in terms of the different accounting systems and the different models that you may want to adopt depending on where you are in your life cycle as a legal professional. You may just be starting off a career as a legal professional. You may be a seasoned campaigner in what you do as a legal professional, but the Law Society has, as part of its bookkeeping compliance documentation, a few recommendations and has information about the different types of systems that you may want to consider, and it does highlight the advantages and the disadvantages of those individual systems so that you're well informed when you make that decision. So starting from the manual double entry system, which is simple and inexpensive but can be very time consuming, especially when you have to deal with a large number of transactions, and you are responsible to ensure the manual ledgering and subledgering of all those financial transactions, and also have to have the onus and the responsibility for any mathematical or arithmetic errors that there may be in the manual involvement that there is. So starting with the manual double entry to a slightly more expensive OneWrite system, to a spreadsheet software. So we have a lot of customers that we speak to before making a transition to a legal accounting software. What they used was a spreadsheet software such as Microsoft Excel. It's a great starting point because it still is inexpensive, but it obviously has Microsoft's licensing involved in terms of purchasing that product. It does facilitate automatic calculations, so you don't have to deal with manual errors in calculating it, so you have formulas that you can apply, but it's still time consuming. It hasn't taken away that problem of dealing with automation as well as the ledgering and the subledgering that needs to happen. There is a certain amount of training that is still required to deal with certain sophisticated ways of managing formulas. And yes, if there is an error in how you've applied that formula, then that's a responsibility that you need to keep in mind. And then we move to a little bit more sophisticated software, which is the general accounting software, such as QuickBooks. A general accounting software obviously will facilitate with automatic calculations. It certainly posts to subledgers, can also provide financial reporting, but it's not necessarily designed for managing trust accounting. And if in the process of being a legal professional, if trust accounting is a part of your business, then you actually do need a separate system that can deal with the trust money outside the general accounting software that you have. It also requires training. Sometimes you may have external help from bookkeepers and accountants to help you through that process. And the last software that is highlighted is a legal accounting software. Now, there's obviously a lot of conversation about what a legal accounting software is. A legal accounting software has been designed right from the get-go to manage trust accounting. It was designed for legal professionals, and hence the name. And it does the automatic calculations such as the other software. It does ledgers and subledgers such as the other software, but it's well-tuned and designed to actually manage both trust and general. And it's one software that can give you a 360 view of your actual firm's hygiene and expenses and revenue, etc. Can really combine those two documents together and give you the true perspective of the ledgers. And what the disadvantages have been highlighted. Obviously, there was a time and age when this document was written. Legal accounting software is expensive and also definitely requires training. But with cloud, with the advent of technology, cloud software, reducing and slashing desktop or PC-based software has now led to the cost advantages that legal professionals can take advantage of. It's a great time and place to be a legal professional as a lot of technology is being used to make lives easier, and so are cloud-based legal accounting software such as uLaw and others. Okay, so want to paint the picture, just set the context. Those are the types of accounting systems that you have in your arsenal to consider. Look at the advantages and disadvantages and decide what's best for you. Regardless of the type of system that you use, the output documents and the compliance documents remain to be the same. Whether you take the help of legal accounting software to automatically generate it for you, or whether you do it manually yourself, regardless of the system that you use, you would still need to generate those documents, okay? Part of your compliance. So to our first agenda item, what are trust ledgers? Or what are ledgers in general, and how do we consider trust and general as two separate ledgers? And when you look at a transaction that happens as part of your legal firm, okay, whether it's revenue that's received or a retainer that's received, whether it's money coming in or money leaving your firm in terms of disbursements, that transaction that happens in a very pragmatic way needs to be recorded in one or both of the ledgers. Okay, so if you're dealing with trust and general, then you have money coming in and leaving both those different accounts, and every transaction that touches trust and or general need to be recorded. Okay, what else do they capture within that ledger? Each ledger also has a running balance by date. What does a running balance mean? Is as of that date, what is the balance in that particular account? Okay, so let's say you had $100 in your trust account, you received a retainer, and that was yesterday, and today you went ahead, docketed your time, you invoiced the client, and let's say you docketed for $50. The fact that you raised the invoice gives you the opportunity to move that money from trust to general, because you've just earned that $50 for yourself. So as of today, if I were to generate a trust ledger, the trust balance should reflect the $50. Okay? And why that is obviously the 100 that came in and the 50 that left out and the 50 that is remaining in the ledgers. A great example to just simplify this has been provided also within the bookkeeping guideline documentation. So if you look at this fictitious lawyer, Leslie Lawyer, and her trust ledger by date, you have the particulars. Before that, it's grouped by the account. So traditionally, these documents are generated for a time period. Okay, so it's a monthly documentation. So most of these documentations are done on a monthly period, end of month. And further, they're broken down within that month by the client. And if there are multiple matters for the same client, then it's one after the other. And within that perspective of a client, what is the information that is required by you to capture? Again, whether it's manually done or automatically done. It's the date. It's the date of that transaction. The particular, what is that transaction about? Was that money coming in or leaving? So was it a receipt or was it a disbursement? And last but not the least, the balance. If you look at that first example of the August 30th transaction, that was a mortgage advance that was received of $40,000 and then was further transferred as part of that trust transfer from the trust account into the general account, and hence the balance as of August 31st is 0. Okay? If you look at a general ledger, so that's kind of the trust ledger. You have another example, Mr. Peter Piper, who received a retainer. A little bit more simpler example, received a retainer. Could have been a $500 retainer, including HST, at $565, right? And as of July 5th, the balance remained to be $565 because no transactions occurred to transact that money out of the trust account till July 14th came around. And on July 14th, an invoice was raised, and the invoice number was 002 for the work done. And the entire $565 was disbursed out of the trust account. Obviously, it's a double entry system. So a deposit or a credit in your trust account means a deposit or a debit into your general account, because money leaving trust is going into another account. Okay? And that's exactly what we're going to be looking at a general ledger perspective. So you look at the same Peter Piper example. You raised an invoice 002, just exactly as we explained or we assumed. There's a $500 fee and there's a $65 HST, and a trust transfer was done, and that's the reference for why that trust transfer was done. And here's the payment on account and the balance owed. Okay? So this is a very important pair of documents, the trust ledger and the general ledger, which pretty much together gives you a complete picture about that particular client and rolls up to give you the balances broken down by clients, but for a time period. Okay. Now let's move on to our next agenda item. That we've looked at trust and general ledger. So those are two documents. We're going to now look at the next set of documents, which are the journals. Again, there are trust journals and general journals. And within the trust, you have both receipt as well as disbursement. So money coming in, money leaving trust. Money coming into general, money leaving general. And what's a good example of money leaving general is a disbursement, or let's say you're doing an application fee where you're paying on your behalf of your client, and it's money leaving your general account. Okay. And what's important about a journal is journals are records of a single type of activity or a transaction, just like your ledger, either receipt or disbursement, and are maintained for both trust and disbursements or general. The important aspect of kind of where it differentiates is, again, as they say, the devil is in the detail, is the actual information that's captured. A common column between these two documents is the date. Obviously, you really want to capture the date when any transaction happened. But here's a slight additional information that these journals capture. Who did you receive that money from? This was not something that was asked for in your ledger, right? It was for that client, but it could have been paid by anyone else. So the source of the fund was for that client, Peter Piper. What was the purpose? We captured the same information. It was a retainer. What was the amount? We've captured that in ledger 2, 565. Which very important piece of information that a journal captures is the method. How did someone pay you? Okay. So it could have been a check that they've given you, a retainer as a check, could have been a retainer as a cash. It could have been through an electronic payment, an email payment, so there are many methods. So you want to make sure you capture the method within that journal. And that's your trust receipt, okay? Money coming in. Likewise, a trust disbursement journal, when you're dispersing and it's leaving that, same thing. You capture the date, the method. So let's say you've moved money from trust to general. Today, you could do an electronic fund transfer, but back in the days, and still continues to be the preferred method, legal professionals write themselves a trust check to move money from trust to general. So that's the method. You wrote, Leslie Lawyer wrote a check 001. And what was the client and purpose? It was towards the legal fee for that invoice. What was the amount? It was $565. That was the amount moved. So that's the money that left trust, and we're capturing the particulars as terms of method of how you paid or moved that money from trust to general, and who was it paid to. Obviously, it's paid to the lawyer or the legal professional in this case. Now let's move to the next two set of documents. We looked at the trust receipt journal, the trust disbursements journal. Now we're going to look at the general receipts journal and the general disbursements. So general receipts, same thing. The date, who did you receive it from, and the amount and the method. So the particulars of the information remains to be the same, but the different accounts that are related here are different because one is a trust and the other is a general. Okay, so these are 4 documents that are a big part of that compliant checklist of documents that the Law Society would request you to present. So let's do a quick recap. 2 ledgers, trust and general, different piece of information, date, which seems to be the consistent column that we capture of particulars, the actual, the reason or what was that transaction, whether it was money received, money leaving, balance. Then we moved on to the 4 journals, 2 journals for trust account and 2 journals for general account. Again, I repeat that if you are not in the habit of dealing with trust money or retainers, then you don't have to generate the trust documents. Okay? So here are a bunch of 6 documents that we've discussed so far. Now let's move on to a next big step in one of the other documents that is required, which is the reconciliation report. So at the end of every month, you need to reconcile the trust account. It's more important for the trust account. The Law Society cares that you reconcile your trust account, and that's the report they need. It's obviously a fantastic habit, and you must reconcile your general so that you have a good control of your firm. But from a compliance perspective, the Law Society is looking you to present the trust reconciliation report. And what is this reconciliation report? There's always this aura, a fear factor about what this document is, what the process is to generate this document. And it's truly an accounting procedure, as it's defined right in the slide, that demonstrates that you as a legal professional have followed your obligation of recording all of those transactions that happen within your legal firm in a very prudent, correct manner. So it's the way for you to represent your prudence in managing the dollars that was given to you bestowed by the power as a legal professional to accept money in trust, and making sure that's not mishandled, making sure that you're recording the transactions as and when they happen, so that when you're being audited, it's just a matter of ensuring that you've done the right thing. And we've broken down the whole reconciliation process to 4 key activities, just so that it's simpler for you to understand the concept, simpler for you to always keep that in mind, simpler for you to repeat that month to month. Recording, and the first step is the recording of the bank statement and the balance. So truly what happens during the reconciliation process is you have your bookkeeping software, your legal accounting software, and what you've told the legal accounting software on a month. You've accepted a retainer, you've told the software you accepted it today or yesterday, but real life could be something else, okay? Real life, the bank that you're dealing with could be TD, RBC, could be any other bank that you deal with. The actual amount in the bank may have reflected a day before or a day after, so you really want to reconcile between what your bookkeeping software knows to what's really happened in real life using your bank statement. So have side by side, whether it's paper-based or electronically available, have them side by side for that particular date period, which is the month, and compare these 2 documents and make sure that they reconcile. Okay, that what you have in the booking software is close to what you have in real life. And if there are anomalies, which is fine, and you know, if there are anomalies, and that's where we move to the next step, recording of the outstanding checks and the deposits and any bank errors that there may be. Okay, and it's totally fine if there are bank errors, because they need to be reflected, they need to be recorded, and that's the explanation there. Okay, an outstanding deposit is where you have told the bookkeeping software that you've written the check or you've received that check, But let's say you went on a vacation and you really did not deposit it into the bank. And it's not obviously not going to reflect in the bank yet. So that would be a mismatch between what your bookkeeping software thinks it knows to what's really happened in real life. And when you do that month end, if that money is still not reflected in your bank, the bank is going to be short of that $300 or $400 or $500 that you said you've already received, right? So you want to highlight that. The bank, for whatever reason, you did not deposit it in time, this still does not reflect. And that's step number 2. And if there are multiple checks that follow the same thing, then you want to add them up, and that's the number that you should expect as the less. Okay? Recording of the client's trust listing, very important. So by client, by the last activity date, you want to list down their trust listing, the amount that these different clients have in their trust account. Okay, and they all add up. So 3 different clients, 3 different last activity days, 3 different amounts. And the last but not the least, the total reconciled trust bank balance and the total unexpended balance for a client's trust ledger need to match. Okay, so it is this number that needs to match. It's not the 40,000 that needs to match. Okay? And I know it sounds simpler, but it truly is. Moving along, so we've looked at the true trust ledgers, trust and general ledgers, sorry. We've looked at the journals, got ledgers, journals, the reconciliation report, and a fee book. A fee book is a very, very important document, both from a compliance perspective, but also for your own firm's, understanding of your revenue. Because truly, this is your revenue book. It's a fee book, but it's money coming in, and it records all of the invoices and disbursements that have been raised that have to be recovered from the clients. Keep in mind, very important, that disbursements that that you disperse or you spend on behalf of a client are also recorded in a fee book. So it's not just the docketed revenue or the docketed money that comes in as part of the revenue, it's also the disbursement, because those are recoverable expenses. Okay? And the fee book also captures, this is one area where you can actually reflect your invoice numbers, because for each and every revenue, for you to make your revenue, you obviously had a formal document to illustrate to your client the work that you've done. Why are you asking that money? Why do you have that revenue in the first place? Because you did that initial client meeting, you went to court, you drafted that document, right? So those are all your dockets that all get reflected in that one formal document, which is the invoice. So it's very important that you capture the date, the invoice number, which is the legal document, the client to whom you sent that invoice, and the amount that was billed as part of that invoice. And if there are any, kind of divide them by fees billed and disbursements billed. Right? In any cycle, in any invoice cycle, you may have a combination of these two. And the third most important aspect that's divided up if there's any HST that's billed. Okay, so you divide that up so that you're capturing the fees, the disbursements, and the HST. And then you have the total. Okay? So let's take the example of Jackie Jones. Through invoice 001, you just raised $113, out of which $100 was the actual fee, $13 was the HST. Likewise, you could have a disbursement where you're charging the client a disbursement, let's say for fax or paper copy. Could be any disbursement. That way you're including the tax, application fee. If there's no HST involved, then you capture that as well. For a court fee, let's say it's tax exempt. That's $95. You would capture $95 as the disbursement billed with 0 HST. Okay? So that's captured within this next document, which is the fee book. Those are some of the core financial documents that are a big component of your compliance documents that you're required and obligated to present as part of your audit. But here are some other documents based on a silo of practice that are also equally important for you to keep in mind. Electronic fund transfers. A lot of our clients for the longest time did not know that existed a form by the name Form 9A. So in the province of Ontario, if you deal with trust money, and if you are in the habit of moving that trust money from your trust account to your general account through an electronic fund means or method, for each and every transaction that happens where the money is moved from a trust account to a general account, a corresponding Form 9A will have to be filled. Okay, so let's say you have two trusts. So let's say you have $500. You raised an invoice for $300. You moved $300 from trust to general. Okay, electronically, you need to fill a Form 9A. 2 days later, you docketed the remaining $200. You raised an invoice, and now you have to move the remaining $200 trust eligible amount, and you do that again through electronic means. You need to fill another Form 9A. Okay, so in this example, you would actually have two Form 9As for that same client. And you have to make that available. It's actually a document that you would have to sign, date, and have it available to show it. Okay, so that's a Form 9A that, again, if you're dealing with trust, it's an important document to keep in mind. If you're not dealing with trust, don't have to worry about it. Cash deposits. Okay, so if you've had deposits, retainers in the form of cash, have receipt and deposit slips available. Another great example would be an inter-matter trust transfer. So if you're in the habit of, or if you're a lawyer in the real estate business and you deal with both the purchase and the sale of a condo, and let's say you had a retainer and or money in trust that you're moving from one matter to the other to carry over, or inter-matter trust transfer, then every time you do that, you do need to capture that information. And there's a document that you need to present that outlines each and every inter-matter trust transfer by client that you have done or transacted over a date period. Okay? And some other examples would be cash receipts, very important, deposit slips that you get from your bank, keep them in always handy. And having these documents, knowing that these are the documents in play, is now going to empower you to be a lot more confident about an audit, a lot more confident about what you need to accomplish when time comes for audit. Okay? And the next 15 minutes, we're going to try and spend the time to walk you through how a legal accounting software, by design, can allow you to generate these documents automatically, where you don't have to necessarily spend the time to do it manually. That time spent or saved can be put to better things in life. Okay? And again, just going through the last slide in terms of setting that next step of the actual demonstration, just a quick recap. Every entry in your accounting system is a double entry. And truly a double entry system means that if there's a debit in one place, there's a credit in another place. Meaning if there's a deposit of money in one place, then there's money removed from another place, and the other way around. Okay, so that's what the double entry means. And each and every touch point of this accounting system needs to be recorded. And the advantage of having an accounting software or any software to begin with is that it does prevent you from making mistakes, manual mistakes that are prone to happen if you're using a manual way of doing things, especially when similar information is being recorded at several places. Okay? And the hope is that one day a seamless accounting software such as uLaw can facilitate ease of accounting or other practice management software or legal accounting software can facilitate for legal professionals to make accounting a lot more simpler, easier, compliant, so that you can continue to focus on what you do best. And what does that look like? What that looks like is for the ability for you to manage your business, for you to manage, you almost use a practice management approach to the legal accounting behind the scenes. Okay, there's a quick question which I will most certainly take at the end of the session. How do you handle and show an overpayment of a tip? A tip is a disallowed expense. So you would capture, to quickly answer that, a tip is a disallowed expense. You would capture it as a disallowed expense, which is more reflected in your own firm's books, and you're running a trust account. So obviously you would move that money from trust to general, but keep the disallowed expense as part of your business expense. Okay. So moving along to kind of the last slide, it's finally about these three core components: compliance, accountability, and the ability to drive insight, use data to drive insight about where you are as a firm. Okay, so a legal accounting software, and there's a few to explore, does give you the power of delivering the compliance and the accountability of the documents that you generate as a legal professional, as well as the analytics that it can provide based on the data it's captured in a very seamless way and in a very automated, in a very easy way, as it's designed to be doing that right from the get-go. And the whole point of this is not only to empower you with the information about the documents that the Law Society would ask you for, but also stoke your interest in getting away from the manual ways of doing things, exposing you to opportunities that you have to automate these tasks by using software. Okay? The most important aspect, regardless of whether you use the software or not, a very critical component keep in mind is to have that discipline to record events, transactions, events, as and when they happen. Whether you write it down on a paper and pen or type it into an Excel sheet or reflect it in a legal accounting software, it would be fantastic if there's a discipline and an easier way of also inputting that information as and when it happens. Okay? And the reconciliation process is truly the ability to keep your financial records and bank records as close as possible to the bookkeeping numbers. And if you can do that on a regular basis, you can even reconcile on a weekly basis, then the sooner you can get those numbers together, the faster and easier it is to reconcile at the end of every month, week, etc. Okay. So I'm going to shift gears now. We have another 15 minutes, and I want to spend a little bit more time answering any questions that you may have. For those who don't know who we are, uLaw is a Canadian legal accounting and practice management software company, and legal accounting is what we do best. So now let me just take a quick moment to jump into uLaw. So this is the uLaw software, which is a legal accounting software and a practice management software. And we're going to look at each and every stage of intaking a client, creating a matter real quick, and then going through those transactions and those events that we spoke about, and the different documents that get generated behind the scenes. Okay? This is, again, uLaw. I reiterate that this is just an example that we're using because we have access to our software, but any legal accounting software should provide this ease of facility to you. So as a first step, let me go ahead and create that same client that we had as an example within the Law Society's ledger. It's Peter Piper. Let me first add a client. I'll say that he was a client that I got through an advertisement that I made in Google. Let's provide a quick address, a fake address, because the Law Society does want you to capture a communication address. You can always use a phone number. Okay, let's go ahead and save this client. We're going to create a matter because that's really the starting point for all those events and transactions to have a logical beginning. So here, Mr. Peter Piper. We'll click on the matter button. And we'll use that same example, or maybe a different example. Let me just go ahead and say, we'll give it a title, we'll give it an area of practice. And let's take the first example. Let's assume that we are in the business of accepting trust into a retainer, as a retainer or otherwise. And as a first step, let me accept a retainer from this client. And by the way, my fictitious legal professional account is one Mr. Roger Moore. So I would say action, and I would deposit that money into trust, and hence it has to be a new retainer, or one of them is that. And here is some of the information that we capture that would reflect in your ledger and journal. One of the first thing is the date. When did you receive that particular transaction? Okay. You received it on the 24th. Let's say the amount is $1,000. And you may have received that through various sources. I'm just going to keep this simple. I'm going to say I received it as a check. Now let us say what the check number is. Right, so we're capturing the method. If you remember, that was an important piece of information. And where is that money going into? The next piece of information, obviously, is the actual client information and for any specific matter. So if Peter Piper had multiple matters involved, you may actually see that. So the date, the amount, the method, and the description or the reference number, which is more for your internal purposes. If someone else paid on behalf of Peter, you can put that. So also capture who that money was received from. Great idea to provide a receipt. And we've just accepted that $1,000 retainer. So let's say Peter paid you that $1,000. Now you reflected that in the uLaw software. And I'm sure we can generate the receipts as well. But let's move on. The fact that now I have that retainer in, let me start to dock it. Okay. So maybe I'll say it's an initial client meeting. Okay. Have some description around what happened with the client. And let's say that I actually spent 1 hour on this docket, but I am going to be charging 2 hours and at the rate of $200 per hour. So here's our first docket. We still have not raised an invoice, so it's still not reflected in some of the documents. Let's move on. Let's go with the motion of adding a disbursement. Now you may obviously, because there's money in trust, you may decide to use disbursement paid out of trust. but I'll go ahead and say paying it from general. And I'm going to say this is a court fee, $100, and I'll say it's tax exempt. So in your general journal, you would have a disbursement of $100 with zero tax. Okay? And let's say this was to the Ministry of Attorney General, or whoever this was for, paid out of your general account, and you created a check, but you wrote a check for that amount. So again, captures the method of how that money left general and who it was for. All right, so we've got a docket, a disbursement, a retainer in. Now let me go ahead and raise an invoice. You can always do a pre-bill so you're confident about what that number is. So let's go ahead and generate an invoice. And here is our first invoice or bill for the work that has been accomplished so far, for that one docket and for that one disbursement. Okay, so here's the client meeting, the $200 to $400 plus tax, $100 that was received for the court fee with zero tax, so it's tax exempt, $1,000 that we received as a retainer, and here is the balance in this client's trust. So you're making it very much available and easy for the client to understand that bill as if it's a running bill. Now let's have a look at those two ledgers, those four journals, and what the fee book looks like as of now. Okay? So let's go into our document generation under accounts and look at the ledgers first. So here's again, uLaw, this is just an example. Other softwares, I'm sure, have other ways in how you can maneuver within their system. To keep it simpler, I would choose a specific client. You traditionally do it for a time period. So let's look at Peter Piper and do his trust ledger, which is the first document. Oops, the date. Let's do it one more time. I'm going to also do it on a monthly basis, so you kind of have a comparison of how it's reflected. Okay, so here is a list of all the clients. There's Ben Franklin, there's Goofy Disney, Joe Blow, and here's Peter Piper. Okay? So far, the only thing that the trust accounting knows that you've received, so this is the trust ledger. You received $1,000 into your trust account, and there's still a balance of $1,000. And that's because you've still not done the electronic fund transfer. So we're going to do that next, and then we're going to come back to this. So here's your trust ledger for Mr. Peter Piper. Let's do the client's general, before which let me quickly do the trust transfer. That's when you raise an invoice, you have the eligible 552 of pending trust transfer, which includes that one docket and that disbursement. So let's go ahead and choose those two components, the 2-hour docket and the $100 disbursement. And let's also highlight now the Form 9A, which was a very important document when you move trust money from trust to general. So here's telling the bookkeeping software that you've moved it from trust to the general account. In a minute, you'll have an electronic fund transfer in play. You have the ability to download a Form 9A. It is important that you document this Form 9A for each and every transaction, even if it is for the same matter and for the same client. Okay, so that's important. So sometimes the question is, can I just have one Form 9A for the entire matter? And that's a no. It has to be done for each and every transaction. For this particular transaction of 552, that was the requisition number. That's all the information in. And as I mentioned earlier on, you would need to sign this and have it available. Okay? Now that we've done that, let's look at how our ledgers are reflected. I would do my trust ledger one more time. So this ledger, compared to this one, is slightly different. When we did not do the trust transfer, we only had the $1,000 being reflected. But after we've done the trust transfer, which means money has actually dispersed out of trust, this reflects the $1,000 that was received, right? The $100 that was moved from trust to general. And why was it moved? Because of this invoice that was raised as a legal fee for that disbursement, for the court fee. And what was the balance when that happened? It was $900. And then you had a $452 bill or fee, and that was the balance in trust. And that's the current balance in trust. Okay? If I look at my general ledger, and let's look at Mr. Peter Piper's general ledger. That was the $1,000, the $100. Oh, there you go. I think I'm not generating the general. Apologies about that. You got the 452 that was raised, and it's very important to keep in mind as we looked at it. It does split it up by the actual fee and the taxes that was collected. So in this case, there was a $52 HST that was collected, and here are all the information that the Law Society would like you to capture. By client, by matter, the date, the particulars, the actual fees, including tax, and the balance owed. So here's the 452, the 100. Again, you can see there was no tax, and that's the balance owed. Okay? Finally, zeroing it to 0. Let's go back to that matter and just have maybe one more docket and close it to 0 so you can have a better picture of it. And this time I'll make it a flat rate to reflect $410. I'm going to quickly erase an invoice, the second invoice for this matter. I'm going to go ahead and do my second trust transfer of $448, which was the remaining out of the $1,000 that we first received. And again, the second Form 9A. And once you've provided the information, we kind of retain that for simplicity. And here's the second Form 9A. So there's two Form 9As that we've generated so far for this matter that needs to be presented as part of your compliance. And there was one last thing, was the client payment, which was over and about the $15.30 that the client owes us, or Mr. Roger Moore, over and about the retainer. So let's accept that payment as well, real quick. Let's say he paid you check, and let's apply. Now that you've done that, now you can actually have a holistic view of all the journals, the ledgers. So let's look at a journal. I'm going to look at the client's trust journal. Let's do it for the month. And with the time that's remaining, I'm just going to go ahead and generate all those journals. So this was the first trust journal. I'll generate the general journal for the month as well. So we could start looking at how a legal accounting software has helped automate the generation of all these compliant documents. Okay? So here is Mr. Peter Piper. This is his trust journal. The date. What was the source? Because if you remember, going back to our presentation, that truly was what the journal was looking for. The date, the source of funds, the client, and the amount. Exactly what we have. The date, the source, the actual matter. We provide some extra information such as the file number, the client, the purpose, the amount, and most importantly, the method. So if you look at for Mr. Peter Piper, it was this particular offense issue, that was his file number, received a retainer, and he paid you a check, $76.76. If you look at the general journal, going back to my presentation, it's the same concept. Here's your general journal, the date, receipt from, amount, and method. And because this is done for a time period, it's obviously bringing up every transaction for all the clients. So if you look at Peter Piper, there was $100 that was came in through an electronic fund transfer. There was a $452 through an electronic fund transfer as well. Then there was a final $448 through the electronic fund transfer for the second invoice that we raised. And the last was the payment that was received, $15.30 through that check. All for the same client, same file number, but different particulars, different amounts, different methods. Likewise, you could generate the payment, like how you had receipt and different 4 journals. This is the trust general for the receipt, all the money received, and this was for the payments. That's the same piece of information that we're capturing. Again, don't want to go beyond what is required. So here is a really good summary of a disbursement journal. By date. And here are the 3 transactions from a trust perspective. Okay, you've got the method, who is the beneficiary, so here's the lawyer, the file number, and the trust transfer and the amount. So these are the 3 different amounts of money that was transferred from trust to general. One was for the court fee, and here are the 2 other legal fees. And the last journal would be the general. Same thing, method, paid to, matter number, by date. Here are the 3 transactions. So one was for $452, was the $100 court fee, and the final $463. Okay? And as you can see, the difference from general to trust is in general we capture the actual tax amount as well. With just a few more minutes left in my webinar, I just want to highlight the last aspect, which is the compliance, which has all these documents, which has the trust, general, the 4 journals, the inter-matter trust transfer fee book. Most importantly, let's do the trust reconciliation, which is just a quick means of you being able to balance or understand what the bookkeeping software knows and reconciling it with what's really happened within the bank. So here is the retainer that was deposited into the trust account. We know that was deposited, or we accepted it on the 24th. Maybe it reflected in the bank on the 25th. So you could go and make that adjustment. And this is where I said you keep your bookkeeping software and you keep your bank account next to each other. And this is how it was done in the old school days too, but it was on paper. We've just made it available electronically. And let's just say the balance. Let's say the balance was that, and I made sure that that was reconciled because it's reflected. You're going to see the clear transactions, the outstanding withdrawals and deposits. If there's any bank errors, you could mention that too. It's always a hard math when you're faking it for a demonstration. Oh, God. The minute the total reconciled account balance and the total unexpected balance per ledger match, you have the ability to generate the reconciliation report. And the reconciliation report obviously should outline, as of the end of this month, what are all the transactions that have cleared, what is the trust clearance, the client listing, and it should give you that document that we looked at from this perspective, the 4 steps, right? So we did the bank balance, we looked at all the outstanding checks if there were any, if there are any deposits, the client listing, and the final comparison of these 2 numbers. So there you go. Closing balance, any outstanding withdrawal, the clear transactions as we know, all the outstanding withdrawals and payments, and the client's trust listing. So for almost every client, again, this is a test database, so you have quite a few trust clients, but then we pretty much list every possible trust clients, give it a total, and that's the comparison as of today's date. You can see they are both balanced. You sign this and have that available as part of your compliance checklist. So it's just a matter of going through the motion. That was reconciliation done in less than a minute. Okay, so if you've got your information ready with your bank account, that's all you need. And yes, you are able to generate, a fee book, which is the last document that I want to highlight today before I wrap up today's webinar. The fee book is, as I mentioned, the place where you're going to capture all of your disbursements as well as the fees that you raised. That separates out with HST as a separate item. By date, by client, description, you've got the fee, actual HST involved, and the total. So here's Mr. Peter Piper. You've got his legal fees, $400 plus his HST. You've got another legal fees for $410 plus the HST involved in that. And here was the court fee of $100, which was a disbursement, but with no tax reflected. Okay. And with that, I open up the floor for any questions that you may have. And our idea for today's webinar was to walk you through the compliant documents checklist that you need to be aware of. We looked at the advantages, looked at really the different types of accounting systems, the advantages and disadvantages, and we took uLaw as an example of a legal accounting software and showcased how a legal accounting software can help you generate these documents in a simple, seamless way as you go through the motion of doing what you do and recording those transactions as and when it happens. Okay? So I thank you once again for joining us in today's webinar. You are certainly able to take advantage of the 1 hour of free CPD credits that this webinar gives you, and we kindly request you to ask any questions that you may have, and I am going to open up the chat windows to ask those questions. And we kindly request you to click on the link that's been provided to make sure that you've given your attendance. So sometimes when the Law Society does ask us if you attended, we could use that as a feedback mechanism. Thank you very much. Okay, a quick question is about the intermatter trust transfer report. I think the question means that you want to be able to generate it, so let's go ahead and do that. Let's say I'm going to do it for the whole year, just to give you an idea of the transaction and what we record. So here's the intermatter trust transfer for the entire year till date. And basically what's captured here is the date when that happened, the particulars of the client and the matter for which that happened, and the amount that was credited. Okay, so basically you could look at the credit and debit combined together for Alex Johnson and the money that's coming into this particular criminal matter. So it was going from one reversal to AJ 93633 to 153799. So it's kind of next to each other. If you look at the Adam Sandler, the two transactions kind of married. That answer that question. And to just reiterate on that first question, which was around how do you handle overpayment on a tip on trust, technically we've often seen that the disallowed expense for a tip is something that is dealt with as a general disbursement and not so as a trust disbursement. Trust disbursements are generally a whole dollar sum money, which you would use appropriately for, let's say, court fees or application fees that are billable in nature. And if there's a disallowed expense for a restaurant bill or something like that, traditionally we've seen that being transacted as a general disbursement. Okay. If there are not any more okay, there's one last question at the last moment. I believe the question is about the Law Society's bookkeeping documents. Yes, absolutely, and that was the webinar. That was the purpose of the webinar, was to highlight the different compliance documents that are asked by the Law Society's auditors at the time of audit, and the legal professional's obligations to generate these documents on a monthly basis. And they're all available under the compliance. Oh, I do apologize. I think the question was specific within uLaw. How do you generate those? Okay, so this is how you would generate it. You would go into the accounts document generation, as most of them are financial documents. And here's a list of all of the compliance documents that you need to be aware of. And again, as I mentioned, it's, you don't have to generate all of these documents. You only have to focus on the ones that make sense to your firm. We highly recommend that you first do your reconciliation, both do your trust and general reconciliation, so that you have a total understanding of, you've made sure that the numbers are right when you close out that month. And then after that, if you generate the trust general and all the documents, then that's a single source of truth, and you've got that nailed down. So, So I hope that answered the question. So really going into compliance under document generation. Once you do the reconciliation, then obviously you're accurate about the books and the numbers, and hence generating the journals and ledgers after the fact would make it even more meaningful. Would also make the analytics more meaningful. So when you actually done the reconciliation, you know exactly the amount of money that you've most definitely made for that month. So when you do your fee book by category or by client for that particular month after you've done your reconciliation, you can be rest assured about the accuracy of these numbers. That you have most certainly made the $169.50 on POA HTA and the $3,000 in small claims. Okay, so with that, because it is a bit later than 4 o'clock, I sincerely thank you for participating in our webinar. And if you have further questions, please feel free to email us at support@uLawPractice.com. This webinar will be recorded and will be available to you and emailed to you, and hence kindly request you to use the link provided in our chat window to clock your attendance. And once again, thank you for your participation, and have yourself a fantastic weekend. Thank you.